Welcome back to Midcap Masala right here on ET Now, and with the whole lot of LPG kind of a disruptions happening and the shortage happening, the other side of the story is that the inductions are getting back in demand, and one such company and one such beneficiary of this trend is Kraft. Let us take the discussion forward with the management, and let me welcome Mr. Rajendra Gandhi, who is the Managing Director of Kraft, joining us on the show. Very good morning, Mr. Gandhi, and thank you so much for your time. So the street is penciling in higher demand for induction cooktops, driven by the shortage of LPG and LNG gas across the country. Are you already witnessing an increase in demand for induction cooktops?
As you all know that we are in the business of cooktops. We make both LPG gas cooktops and the induction cooktops. In the last week, we are seeing sudden surge in demand, particularly on the online channels. We are able to get data on the same day. So there is a huge surge in the DRR, daily run rate of sales of induction cooktops on these channels. And currently, there is a spike of between 5 to 10x of normal sales on the induction cooktops.
And Mr. Gandhi, do you have enough inventory to cater to the surge in demand, and will you be able to increase your production capacity if the need be?
We manufacture these products. We have a strong backward integrated facility. Of course, there are some stocks that we hold. We are able to cater to the demand. If the demand continues at the same pace, we will still be able to cater to 50% growth. Beyond that, there will be a challenge.
Okay, so Mr. Gandhi, you are telling us that you will be able to ramp up your production at least to some extent. But are you looking to raise prices to capitalize on the opportunity of higher demand?
So we correct our prices every quarter. We don't maximize on opportunities like this, but then there is a quarter coming up, the quarter that is starting 1st April. All input costs have gone up. There are a lot of disruption in freight, in forex costs, of course, basic materials like plastic, steel, aluminum, and copper. Because of all this, from the 1st of April, we have new prices that were even otherwise announced to the market, and we will have to pass it on to the consumer. At the moment, we continue to operate at the current price.
All right. Along with that, Mr. Gandhi, now induction cooktop generates 12% of your revenue. How much growth could this segment register in Q4? Any sense on that?
We are continuously growing on the induction cooktop, and this is a small period. We really don't know how it spans off. Even otherwise, we are continuing to grow. While we are growing in other categories, our induction cooktop is a key category for us. And if the demand continues, then as I mentioned, there's a possibility of a 1.5x from here. But I believe this will all get stabilized. Currently there's disruption in LPG supplies, but more and more people will get used to use induction cooktops, and that will start a new replacement cycle for induction cooktop. Overall, it is a positive for Kraft.
Okay, so the move is a positive for you. But Mr. Gandhi, you have also reported very weak export growth over the last few quarters. Has export demand now deteriorated further in the Q4 due to rising tensions in West Asia, or has it improved? What's the situation when it comes to export demand environment?
No, once the tariffs have stabilized, our export demand has come back to normal, and there are new categories of products that we are working with our customers. So we are seeing back to normal from what was there in the last quarter. This quarter is a normal quarter, which is relatively, say, we are at about 12% of our revenues come from export. We are already there, and going forward, we see more growth in the exports again. Of course, because we sell FOB terms to our consumers, there is definitely a price landed cost increase to the consumer because of disruption in sea freight. We have a pipeline of orders for the next 12 months, and we see strong growth coming from exports.
All right, but consequently, do you maintain your 40 to 50% export growth guidance for FY27?
For the coming year, yes, we believe we can grow at that pace. This year, there was a disruption, and particularly we saw negative growth in the Q3. Otherwise, we will maybe end the year at a nominal growth. For the coming year, we can see a strong growth on exports. We have a pipeline of orders for the next 12 months.
All right, but let's talk about the RM pricing trends. You briefly touched upon that in your earlier answer that aluminium as well as stainless steel prices have gone up off late. How much have the prices risen so far? And will you be passing on the impact of surge in the prices? And with how much lag does all this price pass on takes place?
So we are overall as a company witnessing about 7-8% increase in input cost. This is attributed by various materials that we use. Aluminium is the largest material that we use. There is a huge surge in LME prices, and so there is a input cost increase in aluminium, followed by, of course, copper. Every appliance that we make, we use cord wire, and there is a copper content in that, followed by stainless steel. There is an increase in stainless steel cross. Then we bought quite a sizable import where there is a increase in cost of RMB, the Chinese currency versus the rupee. And then currently, because of the disruption, there is also an increase in sea freight. So all these contribute to 7-8% increase, and we have to no choice but to pass that increase to our consumers. And effective 1st April, there are new prices that have been rolling out. Meanwhile, there's been a lag in passing on. We'll have some inventory which takes care of the current times, but then there is also a lag in passing on. So we are growing on our revenue this quarter. We have a very good sales run rate, but definitely there will be some impact on our gross margins to the extent of between 1 to 2%.
And Mr. Gandhi, do you maintain your 10% domestic growth guidance for FY27 now that you're telling us that the demand environment is very good? Are you maintaining your guidance?
Yeah, we will be able to achieve that number.
Okay, so 10% domestic growth guidance remains intact and the export demand environment is also expected to improve going forward. That's the word coming in. Mr. Gandhi, thank you so much for taking your time out. But with that, it's a wrap on this edition of the show. Thanks so much for tuning in.